Here are the best indicators that I personally believe and have used to help my trading in the past. Now, maybe you like indicators, maybe you don't. There are a million ways to trade. Some people trade with naked charts and some people trade with indicators. There's no right or wrong way to trade, and that's important. Before I get into those indicators here, I have a free Telegram group. The link's in the description below. If you'd like to check out my morning analysis there and follow my progress, feel free to join that group there. There's a lot of free content and great information. So let's get into these indicators now. We're going to head over to the charts. I'm going to share with you how I've used them in the past and all the ins and outs of how I incorporated them in my trading. All right, let's go. Here we are over on NQ. Now I pulled up a naked chart. I'm going to add these one by one so you can see them, and then you can search for them in TradingView, and then I'm going to discuss how I use them and how they can be applied on the charts. So the very first one I'm going to get into is the Ichimoku cloud. I'm going to explain how I've used it and how it can be used. So on my chart up here, I'm going to go indicators. I'm going to type in Ichi. It's one of my favorites, and I'm going to put it in the chart. And then very quickly here, I'm going to take a lot of this junk off of this so you can see it. I'm going to go to my settings right here, and I'm going to remove the lagging span, the leading span A, and the leading span B, just so I can the cloud. So here's how I use this in a nutshell and have used it in the past. This is basically great for trending markets, and essentially what it is, if price is above the cloud, price is trending up. If it's below the cloud, generally price is trending down. Now there are these two other lines on the charts, the leading spans, and you can see it's almost a moving average cross. Generally speaking, a really good entry, or what I used to use, is when there's a moving average cross with the leading spans here, leading span A and B, when price is already above or below price. I'll give you a quick example here. Right here is a cross when price is below. Right here, I've circled it as a cross when price is above the cloud. You can see price crosses back. We have the red above the blue, and then it crosses back with the blue above the red for a continuation. If I scroll back further, I can find it again over here. You can see right here, I'll circle on the chart, and I'll even zoom in. You can see here how we have the blue comes above the red, it comes back under, and then it crosses back above right here for another continuation. So very simply put, this is how I've used the Ichimoku cloud in the past. Now this is not all about the Ichimoku cloud. You can do a simple search and find much more information on it, but I'm just giving you a generalized view. Now let's add in something else here. My second favorite indicator that can help in trading is the swing indicator, structure breaks. Let's go ahead and add that to the charts now. This is simply swing. If you type it in here, it's the very first one by Pattern Smart. I'll just put it in my chart here. Now, what I like about this is when I couple this with the Ichimoku cloud, I can then get further confluences or confirmations if there's going to be a trend continuation. So down here, it's really easy to see that these red dotted lines are marking out swing highs. So when this price is broken or price is closing above it, generally speaking, that may be a good indicator that there will be a continuation or may be a continuation with price. So you can see here it does close above here, comes back down into the cloud, and generally speaking with the cloud, typically the cloud can also be used as support and resistance. So if I'm looking here at this particular area and price pulls back down into the cloud, I'm trying to get my stop down here below the cloud somewhere. And then you can see we have another confirmation right here of price continuing on. That's how the swing indicator can be used with the Ichimoku cloud. And even over here, you can see further, right here, price drops below the cloud in this area right here, and then we get a confirmation break right here, and then right here, stops could be above the swing high, and then price continues on downward. Very simple, very easy to understand. That's my second favorite indicator. Now let's go on to my third. So my third indicator, another one of my favorites here, is the fair value gap indicator. I'm going to search fair value gap right here by Lux Algo. I'm going to put that on the chart. This is an awesome indicator because generally speaking, from a technical analysis standpoint, price likes to, in some cases, not always, bounce out of these areas, or this is where price is looking to collect some liquidity or grab liquidity to continue onward. So you can see here, if I just scroll through this, this is marking up all the fair value gaps, and you can see here, if I just extend some of these over, for example, if I extend this gigantic one here all the way over, you can see price coming up into this fair value gap right here, up into it for a move down, up into it again for another move down because the gap didn't fill yet all the way up here. So a very easy indicator to understand. and it can also be applied on lower time frames. Now, what I like to do is start taking all these indicators and pairing together to build a system, a mechanical system, and that's what I've done a lot in the past. Here's another example of a bullish fair value gap right here, and how price just rejects off of it for a continuation up. So one advanced thing here that I like to do is take this fair value gap indicator and then put back on the swing indicator I just showed you, and then use that on lower time frames to look for market structure breaks. So again, what I can do here is then drop down to the lower time frames, put the swing indicator back on. If I go here and type in swing, I'll just pop it back up on the charts and you can see it there. And then I can take the lower time frames here. If I know there's a fair value gap, for example, down here, I can then drop down to the lower time frame, let's say the 5 minute, for example. Let me draw that fair value gap on the chart so it stays there. So if I know there's a fair value gap right here in this area, and if I mark this off right here in this area, I could then drop down to the 5 minute over here, and I can look at my swing indicator, zoom all the way in, and there's that fair value gap. Let me get rid of some of this here. There's that fair value gap, and you can see that here is a market structure break right here for a confirmation for a potential move up. So that's how you can use that indicator. Now let's go into my fourth indicator you can use in TradingView in 2024, and that is the Hull moving average. So what I'm going to do is I'm going to come back out to the 1 hour time frame here, and I'm going to leave some of this on the chart here. I'm going to go to the indicators and type in Hull. And this right here, the Hull exponential moving average. When I put this in the charts here, I like to take the setting here, and I like to use period 80. 60 to 80, give or take, but I tend to like 80. Moving that to 80 will give me a good idea if the market is trending or if it's going sideways. So you can see here, it's green if the trend is up, it's red if the trend is down, and then it kind of goes sideways if we're in a ranging market here. So one way that I've used this indicator a lot in the past, again, is to use this, leave the swing indicator on here, and then look for these shifts in the color here. So you can see this turns green, and then you can see right here, it has a continuation right here with a market structure break. You can see it goes red here. Red here, this would have been a fake out. This would have been a fake out down on when I turn red. And then over here, it's green again. So a lot of these indicators can be mixed and matched. And I want to reiterate that I wouldn't necessarily use just one indicator. I would use multiple indicators for confluences. And again, this is just something to take a look at. If you're one who likes using indicators, I understand they're not for everybody. Personally, I trade with naked charts, fair value gaps, and order blocks, but I have traded this way a lot in the past. And when I have taken a lot of indicators and picked the right ones and put them into a very systematic format, it has certainly helped my trading, or at least give me a different perspective on the market and market structure. So these are the indicators that I love, and I shared with you a very basic way in which I've used them. Remember, I have a free Telegram group that links in the description below. You can join that Telegram group and check out my morning analysis. There's a lot of free content there in that group. And I certainly hope you watch this video. Feel free to like, comment, and subscribe. And if you have any questions, I'll be more than happy to answer them in the comments below. Thanks for watching, and I will talk to you soon.